A mortgage loan is a loan that you take on a piece of property, and that property will be used as security. So let's say you want to buy a house and you take a loan to help you buy the house or construct the house. In case you default paying, it will be taken away. Itachukuliwa. For most mortgages in Kenya, you have to make a down payment, which is a down payment for the value of the property that you're going to buy. So in some contracts, they can say you have to make 10%, 30%. So it's actually a percentage of the value of the property that you're going to buy. And for the remaining amount, you pay it in installments for a period of, let's say, 10 to 30 years. It actually depends. In Kenya, there are mainly two types of interest where you pay. There's the fixed interest and there's the variable interest. In the fixed interest, you're going to pay an exact flat amount over that period of time. So let's say you're going to be making a payment of 30K. So you'll be making 30K, 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 and the amount will not change. Then there's the variable interest. In the variable interest, the interest that you're going to pay will depend on other factors that affect the interest, like the CBK rate usually affects the interest that you're going to pay. So in case it changes, in case there's inflation and all that, the amount that you're going to pay this month might be different from the amount that you're going to pay next month, the other month, the other year. So that's the variable interest. Of course, there are benefits to each and there are also downsides to each. For example, let's say you were to pay a fixed interest, right, of 30K, 30K, 30K. But if you chose the option for the variable interest where the factors that affect the interest make you pay less amount next time, then you'll be losing. Or let's say you're paying a fixed interest of 30K, and if you were to choose the variable interest, the interest that you're going to be paying next month increases, so you lose. So there are benefits to both, there are also downsides to both. It depends on how you view risk and how risky you are. Aside from just paying the mortgage and the installments and the interest and all that, there are also other fees that are charged alongside that. There's the valuation fee. Let's say you want to take a loan from Equity Bank. So Equity Bank will have to value your property and they'll charge you for that, because you can't say your property is worth 2 million or the property that you're going to purchase is worth 2 million. They have to verify that, and so there's that valuation fee which you have to pay for. Then there's the insurance fee. The property that they're going to finance you also has to be insured, so there's the insurance fee. Then the other fee is the stamp duty fee. So in order for you to register that property, transfer a property, you have to pay for that fee. Then there's the legal fee. There are different fees which are charged, so you have to understand them, read about them on the terms of the contract before you sign it. So, having said that, do you think that taking a mortgage is worth it? If you have taken a mortgage before, what was your experience like? Do you struggle paying it, or is it something that you don't regret?